Welcome back to the channel, guys. I'm your host, Buck, and today we are going to talk about, will an election affect your portfolio? And I'm not talking about a Canadian election. I'm talking about the U.S. election, which is coming up in the future. But we'll get right into that because it is a question that I do get a lot, in my opinion, and it's definitely my opinion. But we'll just go ahead and get right into it. First things first, we'll update you because today is Tuesday, but you're seeing this video on Wednesday. If you're new to the channel, welcome. This is where we put in $100 a week into a dividend portfolio, and we start building a dividend portfolio right in front of your eyes. So if you're new, consider hitting that like button, consider subscribing and leaving a comment. And if you're not new, welcome back. And so we're just going to dive right into the portfolio here, and update you guys on what's today, Tuesday, closing day, and what's on for the upcoming weeks. So currently for the day, we are up $1.98, up 0.28% for the day. For the week, we are actually down $10.80, down 1.48% in the past week. It's been a rough week. It's all right. Not a big deal. For the month, we're up $10.86, so up 1.53%. For the 3 month, we're up $10.03, up 1.41% for the past 3 months. And same thing for the 1 year and all, because we are just starting to build this portfolio. So to go through what's in the portfolio currently, is 3 shares of BMO valued at $242.58, 7 shares of Bank of Nova Scotia valued at $389.06. And so we'll just go right into the Bank of Montreal. So again, 3 shares, our average cost basis price is $79.85. It holds 38.4% of the portfolio, and today's return, we were up 1.35% just in BMO at $3.24. Our total return since our position was bought is $3.02, up 1.26%. Today, BMO closes at $80.86, which is Tuesday, just so you guys are aware. Next thing is Bank of Nova Scotia. Next position, 7 shares of Bank of Nova Scotia. Our average cost is $54.58. Today we close at $55.58. Today's return, we are down $1.26, so down 0.32%. But our total return since the position was bought is $7.01. That is up 1.83%. So that is the portfolio currently. As you can see, the markets are unpredictable right now. And one of the things I think we talked about in one of my videos is it's earnings season. So if you haven't checked that video out, I'll put a little bar thing up here. You can check that out. And then also, I don't want to forget, because I have to prove to myself and prove to everyone else, not prove, but just give you evidence that I did transfer $100. And so we will put that picture right here, transferring in, so that we can buy stock or change our position on Friday, which will probably be in BMO. Excuse me. But yeah, that is it. That's pretty much it for the update. Again, this is where we put $100 a week into the portfolio, and we build it over time to build stability in the portfolio, and then we'll look at populating and making some moves like here and there. But right now, what I'm really trying to do here is just build over time and slowly to show people that we can, well, you can build a portfolio over time, and you don't need thousands and thousands of dollars to invest right away up front. But this way, we can build a portfolio over time and get dividends for right away. Like what I'm talking about, like last month we bought Bank of Nova Scotia over and over again. This month we will get a Bank of Nova Scotia dividend. I think it's on the 28th or the 29th, and right now we are in October buying BMO stock, so that at the end of November we can get a dividend as well. So we build it over time while receiving dividends, creating that passive income that I guess a lot of people like. And so that is pretty much that. So again, that is where we're going with this. And so if you're finding value, leave a like and comment and subscribe. But we're going to talk about the elections that are going on in the United States right now, and how does that affect your portfolio. And again, I'm not a financial advisor. I'm definitely not your financial advisor. This is my opinion, really, and don't take everything I say to to heart or anything. Just do your own research and invest on your own. Like, if you want a professional, go seek one. I'm not a professional. I'm just giving you my opinion and my take on things. And so a lot of the times in the marketplace, investors or anybody think elections make a huge impact on your portfolio, and I'm here to tell you, in my opinion, that it really doesn't. Whether it's Democrats or Republicans. And just so you know, the reason I talk about this in this video, because I am from Canada, is the fact that the U.S. market, sometimes, well, for the most part, it drives the Canadian market for some reason. Everything that happens in the U.S. tends to happen on the Canadian markets as well, takes effect. And so that's why I talk about it, because is it important? Yes. Is it really relevant? Yeah, it is, in my opinion. And so back to the topic of whether it's Republicans or Democrats that get to go into office, that get voted in. And I'll show you a chart right here, actually. Yeah, right here. This is the chart for, I think, the past 20 some elections, and the last one was last one's on there. The one that you don't see is 2016 election with Donald Trump, which, with the 1 year posted rate on there, his first year in office, the S&P 500. So this is totally based off the S&P 500. The S&P 500, which is the top 500 companies in the U.S. market, rose 23%. In the third year, it rose 15%. So if you're looking for that data for 2016, there it is. Those are the numbers. But as you can see through the screenshot or whatever, the overall, when you take the average, because we always want to take the average, averaging is a good thing, because it gives you a bigger picture. Whether it's up or down, you want an average. And so first year average overall, whether it's Democrats or Republicans, whether they have bigger gains that year or smaller gains that year, the average return for the first year, and when I say post-election, I mean after first year in office, the average rate of return on the S&P 500, or the rate of appreciation, is only 10%. Not only 10%, it is 10%. And then the 3 year, which is very, very important, whether it's Democrats or Republicans, again, is 12%. So regardless of who gets voted into office, I don't have a say in that, obviously, because I'm Canadian. Whatever the United States decides on with their voting, the average rate of return on the 3 year posted, so the year before the election, averages out to about 12%. And that is including, so that number I calculated with the 2016 elections, the 2016 candidates, and what happened. And so a lot of people think that elections affect their votes, that they should look into maybe certain companies or change their positions in certain things. In my opinion, yeah, maybe you should. Maybe you look into specific companies and things like that. But overall, in general, if a lot of your positions are held in the S&P 500 or the top 100 companies, they will, on average, still do what they continue to do, which is raising capital appreciation in their position, and they won't drop. It's not like if somebody gets voted in, that your stocks will plummet, that everything will plummet. A great example is 2008, when I think it was Obama that got into office. That wasn't because of an election. That was because of the financial markets. That was because of the housing bubble in 2008, the financial crisis that happened. And it wasn't because of an election, or it wasn't because of a president. It wasn't because of something happened with a democracy or whatever it is. The market is the market, and it'll do what it needs to do. Just like today, markets were down, like the first half of the day, all upon a stimulus check for the United States, and then a representative comes up and says, oh, we're getting closer to a deal on a stimulus check for the US citizens. And guess what happens? All of a sudden the markets jump like 100 points or 200 points or something like that. And it's so crazy that these things affect the market, but the market is the market. An election may affect it in the short term, but long term, you don't have to worry. Honestly, I don't think it affects your portfolio that much. It's going to come back anyways. And like the data says, and data is king. You can ask Google or Facebook, data is king. 12% average in a capital appreciation over a 3-year, after an election or after someone takes office. After 3 years of them being in office, the appreciation is about 12%. And so if you're wondering, does the election affect you? Maybe in the short term. In the long term, not really. You're going to face elections every 4 years, right? So regardless of who it is, like I said, honestly, just keep doing what you're doing. Keep on investing slowly in your future. Keep slowly building that portfolio, because even things are down, they're just on sale. And so hopefully you guys did enjoy the video. And again, that's just my opinion. And so if you found value in this video, hit that like button, hit that subscribe button, leave a comment, and we'll definitely see you in the next one, which will be on, well, I record on Friday. You'll probably see it on Saturday or Sunday, probably Saturday, because I got everything out of the way when it came to the remodeling. So again, thanks for watching, and we'll see you guys in the next one. Bye.